Okay.
From you borrowing your own money. They'll charge you an interest rate where if you don't pay it back consistently, it can eat away at the rest of the death benefit. So now you may not have barely any life insurance left or none. And see, then this is where the families start to argue back and forth about, I thought they had life insurance, but they've been paying it for years. They called a life insurance company. Life insurance company is like, well, they borrow from
the,
yes, but
from
that
the
didn't
future death benefit.
Right.
That's what it is.
Well, they'll say, to be honest, it's supposed to be a whole separate contract. But because it is two contracts commingling in one, okay, you have your life insurance and your investment commingling in one contract, so they can actually play off the words where, what are we not going to do? We're just going to hear we can borrow from the policy, but we're not physically going to put our eyes on that policy to read it.
All right, what's going on, everybody? It's your boy Brad. I'm back with Flip Market. We're here with the Flip Market podcast. I'm here with Syreeta Ready, aka Always Ready.
Always.
How you doing today?
I'm good. How are you?
Doing good. I hope you like what I put together right here, man.
I love it. I love the view. It's
yeah,
great.
Good vibes, good times.
And the weather's nice.
The weather's perfect today, right?
Absolutely.
I thought we was gonna get rained out, but we made it. We lucked out today.
Yeah, we're good.
That's
We're good.
Well, I'm gonna sip this water, and I want you to tell me how you flip the market.
Hey, how I flip the market? I flip the market in the financial service industry, which I am a life insurance producer in the state of South Carolina, Georgia, Texas, and right now Alabama, but looking to have my license in all 50 states. So that's what I'm doing.
Let's go. That's
Thank
major.
you. Thank you. The financial service industry is a very lucrative industry, and anybody can get themselves into it. So
yeah, let's learn something today. I want to learn something. Let's start with the basics. For anybody who don't know what life insurance services is or anything, can you just give me a nice definition to get me started here?
Okay, so what life insurance is an income replacement just in case a life is lost too soon. So it's important for anybody, even if you don't have children or what have you, just to have life insurance because it takes care of your affairs, your financial affairs. Bury you, of course, financial affairs. You know, if you have dependents. The dependents can actually live off on it for up to 10 years. It just depends on the amount of policy that people, can get and actually can afford.
Oh my gosh. Okay. Let's do this. Because me personally, I don't have life insurance or whatever. So this is gonna be like a real. I'm about to go in because if you do me good, I'm gonna get that. All right.
Hey.
So let's start with the basics. What the number one question, which shouldn't matter at all, but it's the number one question that I know the audience is going to ask is, how much does this stuff cost? And what's my benefits in giving you money?
Right. Okay. So life insurance, it can be very affordable and it can be very expensive. It just depends on what type of policy that you are getting. Now, there are some policies. There's actually two types of policies out there. There's one called term life. It gives you a large amount of coverage for a affordable price, and then there's another one called a whole life permanent policy that can be really expensive. It can cost anybody between $3,000 to $1,000 or such, and it's because of that one has a whole life. Actually has a cash value savings attached to it, so people can
cash value savings.
Yes, we'll dive into that. We'll dive into that.
What does cash value savings stand for?
So whole life policy, permanent policies that have cash value savings. These cash value savings is where you can actually invest in your life insurance policy, and you can borrow from the life insurance policy, in which a lot of agents. We're going to get deep on this, okay? Because I'm going to be honest with you. I'm going to be honest with you.
Guys.
I don't put anybody in whole life policies, okay? Because there's a reason behind that. And it's a reason with my company, how we were founded and what we were founded on. So if you want to get real deep into what the whole life policy is.
What's your company? Let's start with what's your company and what makes you different than the next person who's telling you about it.
Gotcha. So I'm currently with Primerica. Company been around ever since 1977. Started out with our founder Art Williams, and of course, it just grew from there. I have a very incredible multimillionaire mentor that teaches me every single day about the financial services. But so Primerica is simply on truly helping people understand their policies, teaching people how money works, and also helping them with gaining a residual income at the same time. But with the two policies, we're the only company that what we're different from our competition, because we're the only company that actually helps families with term life insurance. So teaching them how to invest term.
What's term life?
Okay.
Yeah.
So term life is just a straight life insurance contract. It gives you a large amount of money on your life for a very affordable amount per month. Okay. Whole life is different because it has that cash value savings, where life insurance agents will tell you that you can invest into those particular policies and you can borrow from them. Yes, you can. You can borrow from them while you're alive, but to be honest, life insurance is not for the living. It's for your dependents, who you leave behind, the bills and things of that nature. The reason
it's more
why,
like a alley-oop, you would say.
Right.
Alley-oop to the dependents.
Yes.
Okay.
Yes.
Okay.
And exactly, an alley-oop. It actually creates what life insurance really is too. We can actually create generations of wealth with life insurance. How? Because when a person passes away, if the grandparents have a substantial amount of life insurance on their body, if they pass away first, it goes to their children. Now their children is a little bit wealthier than they are.
Right.
Then when they get a large amount of life insurance policy, it gets passed down to the next generation.
Quick question.
Okay.
Is that why you feel like so much of generational wealth is missing?
Yes.
I just took a shot there, but I'm just thinking, like, man, if because usually in our community, when somebody die, we gotta take the burden.
We gotta do a GoFundMe.
We gotta do a GoFundMe.
And
we gotta
I'm
take
tired
the
of
burden.
seeing GoFundMes.
We gotta do a go get that for me.
Right.
Can I hold on to that?
Car
Whatever.
wash.
Yeah.
Yes.
Whatever the case is.
Right. It's because we're not properly educated. Okay. Lack of education. So we're not properly educated on why we need life insurance and what it's for and how we can grow generations of wealth. And I'm going to take you back in history. Think about the names Rockefellers. Think about the DuPonts. They knew that life insurance was a way to grow generations of wealth. And they know one thing is for sure and one thing is for certain, that we're all going to pass away one day. We're all going to pass away one day. But what we like to do, and to be honest, I'm going to be honest with my people, what we like to do, we only like to get a life insurance policy enough to bury us. Not enough. We're not thinking about who's left behind. We're not thinking about, okay, if I pass away and these kids are still here and they depend on me, I just need enough to bury me. They can take care of themselves. No. If we get a substantial amount term life insurance on our bodies, once we pass away, if you have $1 million, $500,000, that's passed down to the next generation, whoever the beneficiary is.
That's crazy.
And now they can live off that money, and we also show them how to invest in a mutual fund, a Roth IRA, have it in a family trust, right? And then eventually they can live off the interest of their money to make it grow, compound interest.
Nah, this is good, because man, like I said, I don't even have it myself, so I'm just just food for thought. Man, what do I want to know more? I want to sign up today.
All right, but, so let me tell you about the whole life policy. Is the reason why we do not put anybody in a whole life policy. So what our company was founded on, let me ask you this question first. Do you believe that there is corruption in almost every industry?
Oh yeah, come on now.
All right, so there's corruption in the life insurance industry as well, okay? A lot of life insurance agents is not going to wake it up, but our company, Primerica, was developed on the corruption. Our founder's father passed away at the age of 48 of a massive heart attack, and he had a whole life insurance policy. But in the whole life insurance policy, like I said, there's that cash value savings. There's three components. There's your death benefit, the premium that you pay every single month to keep the death benefit active, and also there's that cash value savings. Most of your money that you're paying and every single month is going into the cash value savings. Over time, it will grow because it's supposed to accumulate interest. If you know Albert Einstein, he was known for saying compound interest is the eighth wonder of the world. He who knows it earns it. He who doesn't pays it. So you can actually earn it in the life insurance policy. But when you borrow your own money, okay, they'll tell you that you can borrow from your. Now
I've heard of real estate agents, not real estate agents, but real estate investors. I heard of them doing this thing called infinite banking.
Infinite banking.
Now how does this play with what you doing?
Yes. Okay. So infinite banking is also a life insurance life insurance policy. Now, if you know how to use those particular policies, I say go for it.
Okay.
But if you do not, the average person does not know how, right? They'll say, oh, I need some money to pay for something that's not going to give them a return.
Correct.
Right? To make them make more money.
Kind of like when people get funded or something like that,
Right.
and
they spend it on
they got $100,000 in credit cards,
and they spend it on crap that's not going to make them more money. So in these particular policies, you borrow from it, it actually plays off the death benefit. It drops the death benefit. People don't know that. They're thinking that it doesn't even affect the death benefit. So think about it. Let's say, for example, let's say a person has $150,000 on their body. They're paying about $500 a month, and they also have a cash value. So a small portion of their payment is keeping that $150,000 active, but the rest of their money is going into the cash value savings.
Okay.
And let's say over time that it grew to $50,000. And it takes a minute. It takes a while, because life insurance, we feel that it's the worst investment plan that you can do. Okay. It grows very slow, right? So let's say over 20 years, you got $50,000 in there. You borrow from your 50, it drops the death benefit. If it drops the death benefit, now you may not have enough money to save your house, because we ask, when we put people's life insurance policies together, we ask, do you have a mortgage? How much is your remaining balance? So now check this out. If someone passed away, let's say they borrowed from their money in this whole life policy, they pass away, right? And they weren't consistently paying it back, so it drops their death benefit, that $50,000. And then the interest rate, they also charge you an interest rate in these policies.
Oh, okay.
From you borrowing your own money. They'll charge you an interest rate where if you don't pay it back consistently, it can eat away at the rest of the death benefit. So now you may not have barely any life insurance left or none. And see, then this is where the families start to argue back and forth about, I thought they had life insurance, but they've been paying it for years. They called a life insurance company. Life insurance company is like, well, they borrow from the, yes, but that didn't,
future death benefit.
Right.
That's what it is.
Well, they'll say, to be honest, it's supposed to be a whole separate contract. But because it is two contracts commingling in one, okay, you have your life insurance and your investment commingling in one contract, so they can actually play off the words where, what are we not going to do? We're just going to hear we can borrow from the policy, but we're not physically going to put our eyes on that policy to read it.
Right.
That's the problem. We don't read, okay? We just hear what somebody says.
And you're off to the rest.
And then
let me stop this real quick right now, and y'all over here too. Man, listen, just don't take it. The YouTube University is great, but if you ain't having these sit downs and locking in with folks, I'm trying to tell y'all, man, y'all got to lock in with the right people, man, because she's spitting real game right here. This podcast is to educate you, not to get you on a high, to get you to click a button. You feel me? We're here to really open up what's going on, like how the market flipped upside down.
Absolutely.
Yeah. So continue.
Yes.
Let's talk about the family. How do I get more family members to get a part of this?
Yes.
To get a part of this type of whole
Absolutely.
situation.
It is just spreading the word, word of mouth, educating families on different types of life insurance. If they have a whole life, we can actually show them in their policy where the discrepancy is, where their money is going to be taken eventually. Because that's also, even if they don't borrow from their policy, let's say death happens, they have about $60,000 in that cash value savings. Guess where the money goes?
What?
It's kept by the life insurance company. They don't even give it to the family, even though it's your money that you've been paying into the policy. Yes, you can Google it.
And is it because of that interest you were talking about?
It's because of, they set it up in the policy that way. So it says, when a person passes away, the cash value savings is kept by the life insurance company. Any loans or withdrawals that you have made from yourself, it is withdrawn and minus out of the death benefit, and that's what the family will get. Whatever's left over, if they don't even get to touch it or whatever, the life insurance company keeps the life insurance company actually keeps their whole savings in their cash value savings. That's what happened to our founder. Our founder's father, when he passed away, he had about $60,000 in his cash value savings. His wife had called and said, hey, my husband passed away. Can you please pay out the claim? They said, yes, ma'am, you'll be receiving this amount. She was like, well, what about our 60,000? He's been paying for years, growing our money in the cash value savings portion. They said, ma'am, did you read your contract? And she said, what do you mean? They said, ma'am, you have to read your contract. It says it in the contract that your money is kept by the life insurance company. Yeah. So so this
fellas,
is what we want to wake
anybody,
up for
if you got a life insurance policy right now, go read it.
Yes. Contact me.
Yeah. Hit the link in the bio.
Contact me.
Hit the link in the bio. Hit the link in the bio. Contact her so she can really see if she can find some discrepancies up in your policy.
I will.
Because like all jokes aside, guys, like this is real right here. Like, you know, we talking about what's gonna happen when you can't do nothing no more. You know what I'm saying? So just think about that. You know what I mean? Everybody, just think about it. You know, that's real. Because I had to really just press pause real quick. Because like, you can get messed up in this game if you don't read.
Absolutely.
That go with real estate. That go with any type of business that we dealing with. Man, if you ain't reading your paperwork and don't got other people, other eyes on it, other angles, you know, because that's what life about, is being able to look through other people glasses, like looking through you, get your opinion on something. How does this water taste from your point of view? You know, it's all about point of view. So that's what we're doing here today, man. You got a guide you was telling me about, right?
Yes.
Let's talk a little bit about the guide.
So the guide is called How Money Works. So it goes over, it actually goes over how money works, how people can actually grow money in an investment, a separate contract. When you want to grow money in an investment, it needs to be a separate contract from the life insurance, okay? Reason why? Because you do not want to contract someone commingling where they can pay off the words, trick you, take your money because you're not reading, you're signing the dotted line, you close that baby up, you're done. So we actually teach our clients, and it's because our company is really like it's like an educational school, basically, adult school, you might as well want to say. So we teach families how money works and also show them how they can actually grow a residual income with it too, by helping their friends and family into life insurance and showing them the difference between the two, showing them about how they can actually grow their money in a Roth IRA. IRA stands for?
A Roth IRA, can you explain that to the viewers who don't know what that is?
A Roth IRA stands for Income Retirement Account, okay? So we want to help families understand that they can actually grow money in an income retirement account. So by the time they're at retirement age, they can live off the interest of their money instead of having to still go to work. Every time I share this information, I ask someone, especially if they're young, I said, just think about yourself now, but I want you to think about yourself in the future. Where are you going to be at 65, 70 years old, 80 years old? Are you still going to be working? You know, what are you going to be doing? Where is money coming in at for you, right? Some people outlive their retirement fund and they have to go back to work because they have no money coming in. And also, I want y'all to look this up. I already looked it up. Social Security supposed to be going away 2034, 2035. They're supposed to be wiping that out. Yes.
Did y'all? Boy, some people gonna be hurt. Some people. Hey, listen. The world's changing, guys.
It is. It is.
When it comes to policies, organizations, tech, AI.
Yep.
You got everything changing. Everything's changing. You got to keep afloat. That's what this podcast for, guys.
Definitely.
Keeping afloat, man. Understanding what's going on. Go ahead, tell them where to find you at, where they can check you out.
Yes. You can definitely find me on IG at Miss Ready. It's MXS_Ready, READY. Yes, that is my actual last name. It's not an IG name. That is actually my last name. My name is Syreeta Ready. You can find me on Facebook at Syreeta Ready, SYREETA, last name Ready, READY. Of course, I'm on Threads too, the new Threads.
Yeah,
I don't even know my handle name, but you can follow me on IG. You'll find me on Threads.
Nice.
You'll find me on Threads. But we're also looking for anybody that wants to join our team to make money from home, y'all. This is, to be honest.
Y'all hear this?
The way we do life insurance now, like before, I'm gonna tell you something, before COVID, okay, and we just had COVID, right? We just had it. Before COVID, in the life insurance industry, we had to go to people's houses, sit at the table to physically submit an application. Right now, most of the time, I'm halfway dressed from the waist up, and I'm on my computer and I'm servicing people all over the United States, putting them in life insurance policy. And when we do that from home, we get paid very lucrative. The business is super lucrative. I'm telling you, it's lucrative. Like, to be honest, the financial service industry, we create the most millionaires and billionaires. My personal coach who I work with, he's from South Central LA. He was 24 years old when he joined the financial services, joined actually our company, Primerica, at the age of 24. He was a paramedic, made $5 and some change an hour. Right now, today, he is a multi-millionaire from being with our company, building a big distribution, helping people with life insurance, teaching them about investments. And he actually just teaches about capitalism, period. And guess what? He looks like us.
Let's go. I'm gonna have to definitely give him a talk.
Yes, I will definitely connect you to him.
Yeah,
and also, he's not, okay, I wanna definitely give love to anybody who just recently made their millions, who is just a new millionaire, right? We have an opportunity these days to make, it's like a lot of people are becoming millionaires every single day. But my coach, the reason why I was so intrigued, first off, he's been married to his wife for 37 years. They built a big business where they have a family business. It's him, his wife, his son, his son's wife. They're all in it together. They make about $250,000 a month. All right, and just this company, okay? And he's been a millionaire for 32 years. It took him 5 years to make his first million, and he's had longevity. So to see a family that looks like me, right, and has had multi-millions for over 30 years, and I'm like, ooh, that's longevity. I need to hang on to them.
Yeah.
And I'm always in California with them. Always in California.
Just before we get up out of here, touch base on the ecosystem, because I got a mentor, Mr. Empowerment. Shout out Mr. Empowerment. It's all about the ecosystem. It's about the people who can get you going, and it's about being able to get around. And shout out to the hub too. Everybody in the hub, real estate hub. It's all about the ecosystem, man. Being able to hear somebody just got off a call, landed the deal, to be able to hear somebody just help somebody out, to be able to hear somebody flip the script on it, man. Tell me a little bit about the ecosystem, man.
All I can say, birds of the feather flock together. You know, if you're seeking it, if you're seeking the information, you shall find it, right? And you have to stick around the people who have done it, not somebody who has done it, lost it, and can't get it back. I mean, somebody who has it and still have it now. Follow them, listen to them, because my coach, I'm telling y'all can look him up. His name is Gary D. Cornegay. I'm telling you, he's phenomenal, right? Phenomenal coach. Him and his son, we call his son G2, but I'm telling you, they're amazing. And you know, long as you are around people who have the results that you want, you're always always a student. Always remain a student, right? When you remain a student, when the student's ready, the teacher will appear, right? So always remain a student. Stick around those people. Make sure you follow the right people. They have the right information that you need. Not just anybody, okay? I'm sorry. Hey, y'all get mad at me if you want to, but don't listen to your uncles, your aunties if they don't have it or what have you, okay? Your mama and your daddy or whatever. I'm gonna be real, okay? Love them. But if they don't have the results that you're looking for, you got to search out there and find a mentor that does, so you can follow them, okay? Follow them and get all the information you need. Be a sponge, soak it up.
That's real.
Be a sponge and soak it up.
That's real. Be a sponge, y'all. Today's lesson is be a sponge, and the second lesson is make sure you tap that link in the bio.
Yes.
Follow. Make sure you schedule a consultation if you want to learn any more about the life insurance situation. She'll be able to give you all the play-by-play. We even gonna have the link to the guide too, right?
Yes.
Yeah, she's gonna give me the link to the guide. We'll make sure we put that down below. You guys, make sure you follow me. Make sure you follow Syreeta. We're going crazy this year, guys.
Absolutely.
I want to know how y'all flip the market next. All right. If you learned something, man, put it in the comment. Put something what you learned on the comment, your aha moment. And man, we're gonna go from there, man. We're gonna enjoy this view. We're gonna soak it up. All right.
Hey, let's go.
Let's get it.